It's a story that starts with a complete misunderstanding of what a petrodollar is, a secret agreement that dates back to the 1970s between the United States and Saudi Arabia, and a brand new agreement that's about to take place. And all of that led to a completely misleading article about the death of the petrodollar and subsequently the US dollar, and fooled some of the best finance YouTubers on the planet. And if you haven't guessed it, we're going to talk about the truth about Saudi Arabia abandoning the petrodollar and what that really means. But before we get into it, at the end of this video, if you found it interesting, if you have found it informative, do me a favor, hit the subscribe button and hit the like button so more people like you can see this video. It really helps me get more videos like this about the truth and what's actually happening in the economy out to more and more people. I appreciate each and every one of you who does hit that subscribe and that like button. Oh, and I'm also interested to hear what you think is happening with the petrodollar and subsequently the US dollar and what it means for our economy. A lot of the best video ideas and the best information that I receive comes directly out of the comments. Okay, so let's get into it. Let's discuss the secret deal between Saudi Arabia that dates back to the 1970s, the new deal that is about to replace it, and how this misleading article led to a whole bunch of misinformation spreading throughout the internet in a way that is absolutely absurd. So I want to start by pointing out really what happened here. And this is a video from Andre Geic, who is, in my mind, one of the best financial YouTubers on the planet. In fact, as far as I'm concerned, there is nobody who does it better than Andre does. But a recent article about Saudi Arabia abandoning the petrodollar and the US dollar led him to make a video that was actually probably one of the most misleading and worst videos I've seen on his channel. Not because it was poorly produced and because it was poorly done, but because it was poorly researched. And he didn't actually get to the gist of what was happening with the actual lapsing, let's call it, of the previous deal between Saudi Arabia and the US. And it's really interesting because when you dig into the comments, the top comment with 7.1 thousand likes is, "Isn't it odd that this story is nowhere on mainstream media?" And of course, Andre responded, "I thought it was odd, yes, LOL." Now, is that laugh out loud, an LOL of, "I can't believe I was the first of the story," or was it nervous laughter because when something as big as Saudi Arabia abandoning the US dollar doesn't hit the mainstream news, your first instinct should be to start to wonder why it didn't hit the mainstream news. And most likely when it doesn't hit the mainstream news, it's not because the mainstream news is suppressing this, because believe me, in an election year, when you've got Fox and CNN battling for not only their respective political parties, but also for views, you're going to have to believe that one of these two major news outlets is going to pick up this story and blame everything on Biden or blame everything on Trump or talk about how Trump's going to fix it or whatever. But this didn't end up hitting the news. And the reason why it didn't hit the news is because it actually wasn't news. And when you see mainstream media not picking up stories like this, you have to really dig into what is going on. And unfortunately, Andre in his video didn't do this. So let's talk about what was actually going on here. And in order to understand this, we first need to understand what the petrodollar is. So in Andre's video, he talks about that the US dollar is backed not by gold, but backed by oil. And that is completely false. In fact, it's completely backwards. The reason why the petrodollar exists is because the US, being the biggest economy in the world, is the most likely place for countries to actually invest their money. It is the most stable economy, it is the biggest economy, and it's no surprise that central banks and other countries are going to want to invest their money into the biggest and the safest economy in the world. So what you need to understand about the petrodollar is it's simply the money, the currency that is being used to pay for oil. So petrodollars are US dollars paid to an oil exporting country. They are the primary source of revenue for many OPEC oil members and other oil exporters. The reason why is because most countries want to deal in a currency that is easily exchangeable between themselves and other nations. And therefore, it makes it easier for them to invest the money, the export proceeds, into things that actually could make them more revenues. Now, that being said, it doesn't mean that the US dollar is the only currency that OPEC members, Saudi Arabia, and other countries can use in order to trade for oil. In fact, if you look at China and Russia right now, they are obviously trading in non-US dollars because Russia doesn't have the ability to trade in US dollars right now, which leads us to a little bit of the story that we'll get to a little bit later on, where we talk about the fact that there is a desire for a currency that will help countries trade easier, faster, but there's also some issues that come along with that as well. Now, here's the main news here, and this was the first major news outlet that picked up on this story. It's from MarketWatch. And here's the headline. Reports of the petrodollar system's demise are fake news, and here's why. And the key piece here is that the agreement between Saudi Arabia and the US to have a petrodollar and exclusively trade in US dollars, so in other words, limiting Saudi Arabia to only being able to trade in US dollars for their oil, simply never existed. Yes, there was an agreement, but it was not an agreement that obligated Saudi Arabia to trade only in US dollars. That has never been a thing. And in the MarketWatch article, they talk about the fact that this seemed like big news, and many wondered why the mainstream media had seemingly ignored it, because obviously nobody covered it. Well, it turns out there was good reason for that. So when everyone got up in arms on platforms like X and Instagram and Facebook and YouTube, citing that this 50-year-old agreement between the US that obligated Saudi Arabia to price its crude oil exports in US dollars had expired, and talking about that the collapse of the deal would be a fatal blow to US dollar status as the de facto global reserve currency, well, surely there's going to be financial upheaval ahead and the collapse of the US dollar is imminent. In fact, this became so big on social media that last week, the fake news story about the petrodollar actually spiked on Google, becoming one of the most popular topics searched for on the platform. But this is where the story shifts, because there were several Wall Street and foreign policy experts that pointed out the fatal flaw to the whole logic. And that is this. It's that the agreement to trade in only US dollars never actually existed. Now, yes, there was an agreement, and it was a secret agreement that Bloomberg actually broke in 2016 via a Freedom of Information and Privacy Act request that was successful, and I'll get to that in a little bit. But first, let's talk about what some of these commentators and these Wall Street experts said about this whole thing. So first was this from Paul Donovan of UBS. And he wrote a whole article on the dangers of confirming your beliefs. So in other words, the dangers of confirmation bias. And that's what's happening here, is a lot of people believe that the US dollar is going to collapse, and therefore they also believe that this is obvious evidence that supports that theory. But he broke this out and he talked a whole bunch of things. So first, he talked about the fact that the US and Saudi Arabia did establish a joint economic commission in June of 1974. The aim was to help Saudi Arabia spend its sudden glut of dollars on US products. In July of that year, Saudi agreed to invest oil dollars in US treasuries, and this was kept completely secret until 2016. Now, he also pointed out that oil has traded in non-dollar currencies since that time. In January 2023, Saudi indicated it was happy to negotiate oil sales in other currencies. The possibility changes little for financial markets. Saudi Arabia's rial, I'm horrible at pronouncing other currencies' names, remains pegged to the dollar, and its stock of financial assets are dollar-focused. The dollar's reserve status depends on how money is stored, not how transactions are denominated. Then he goes on to say, this is a reminder of confirmation bias. The story seems to have started in the crypto world. Many crypto speculators desperately want to believe in the dollar's demise. Confirmation bias encourages people to ignore what is realistic if their prejudices are seemingly confirmed. This is poor investment strategy. So let's talk about that secret deal. And according to the US Government Accountability Office, after they were forced to release this information in 2016, the United States-Saudi Arabian Joint Commission on Economic Cooperation was established on the heels of the Arab oil embargo and price increases. The deal fosters closer political ties between the two countries through economic cooperation. That's it. It's all about economic cooperation, not an obligation by Saudi Arabia to have to price its oil in US dollars. The whole point of the deal was to recycle petrodollars and facilitate the flow to Saudi Arabia of Americans' goods, services, and technology, including weapons. The commission had a system of parallel command. I won't get into the details on that, but basically it was a joint effort between the two countries to pay for oil in US dollars and then give Saudi Arabia a place to invest those US dollars so that they could continue to have more and more revenues while also getting some economic benefit via their relationship with the United States. Now, in addition to the UBS commentary on this, Jeffrey Kleintop, who's the chief global investment strategist at Charles Schwab, also noted that people need to relax. The end of the petrodollar agreement between the US and Saudi Arabia is pretty meaningless for at least three big reasons. The first is that global oil financing, insurance, and transport systems remain almost entirely US dollar based. While oil could be increasingly bartered or sold in other currencies, once the proceeds are received by the Saudis, they are likely to be invested in dollar-denominated assets. In other words, treasuries, rather than the yuan or the rupee denominated ones, because obviously world's biggest economy, world's safest economy. The Saudis are more likely to invest in places where they're going to have reasonable returns without the same sort of government controls than they are to invest in a place like China. This is just simple logic. Now, yes, is there an opportunity to invest in China over the coming years and have that be fruitful in the same way that it was with their relationship with the United States? Absolutely. However, this comes down to power. And Saudi Arabia wields a significant amount of power, as you'll see in a minute, by virtue of their status as one of the biggest investors in the US economy. And then last but not least, there's about 10 times as much oil traded in futures than physically delivered, and the futures are denominated by dollars. Now, this is where it gets really interesting because now there's a last line in addition to these three major reasons. And there's kind of a little bit of a mistype here, but there are plenty of other reasons this doesn't matter, including that the expiration is part of the strategic alliance agreement between Saudi and the US. This is what is being currently worked on, where the US gets access to Saudi land and airspace for defense purposes, so it isn't likely that Saudi is siding with China against the US. So in other words, they've let their current deal lapse in favor of a new deal, which is probably going to carry a significant amount of the components of the previous one. So the relationship between the US and Saudi Arabia actually appears to be getting stronger, not weaker. And this is confirmed by Reuters, US Saudi Arabia close to finalizing draft security treaty, Wall Street Journal reports. So it makes sense that this agreement lapsed when there is a brand new agreement that is being put into place. Now, this is where it gets really interesting because let's talk about the previous agreement. Now, in 2016, Bloomberg broke this story. It's the untold story behind Saudi Arabia's 41-year US debt secret and how a legendary bond trader from Salomon Brothers brokered a do-or-die deal that reshaped US-Saudi relations for generations. So this deal was essentially designed to create a backdoor way for Saudi Arabia to invest in US treasuries. And the reason this deal was so important was because it wanted to create a relationship between Saudi Arabia and the US that essentially neutralized Russia and its influence in the region. And the primary appeal here was US government debt, the security associated with it, and the returns associated with it. This was, and still is, the safest place for any country to park its foreign currencies. The basic framework was strikingly simple. The US would buy oil from Saudi Arabia and provide the kingdom military aid and equipment. In return, the Saudis would plow billions of their Petrodollar revenue back into treasuries and finance America's spending. Now, this makes it quite clear that there was an incentive for Saudi Arabia to sell their oil in US dollars, especially given the fact that they were going to continue to invest it into the United States and have some significant benefits as a result. But there was one catch to all of this, and that is that Saudi Arabia wanted the investments to remain strictly secret. They did not want to be seen as a primary ally of the United States and have their ability to sell oil to other countries hindered as a result. And this secret was kept for almost 4 decades, which is absolutely unprecedented. It wasn't until Bloomberg filed a Freedom of Information Act request in 2016 that the Treasury actually admitted that they had this deal in place, and they disclosed some of Saudi Arabia's holdings, $117 billion worth to be exact. Now, this number was obviously and is obviously significantly lower than the real number because it represents just 20% of the $587 billion of foreign reserves that Saudi has actually declared, which is well below the 2/3 that central banks typically keep in dollar assets. Some analysts speculate that the kingdom may be masking its US debt holdings by accumulating treasuries through offshore financial centers, which show up in the data of other countries. And as you start to see the numbers here, it becomes quite clear that that is what they're doing, especially when you consider that when the US contemplated a law that would allow Saudi Arabia to be held responsible for the 9/11 attacks, the Saudis responded by threatening to sell over $750 billion in US assets. So if they only have $117 billion in US assets, but they can threaten to sell over $750 billion in US assets, you start to see that there's a significant amount of secret holdings that Saudi Arabia is in control of. And those holdings are well in excess of what the publicly available data would indicate. In fact, when you take a look at the list of major foreign holders of treasury securities, what you'll notice is that publicly, Saudi Arabia only declares $135 billion worth of these securities. But given the fact that they've declared that they have up to $750 billion worth of these securities or other US assets, it becomes reasonable to assume that Saudi Arabia may hold as much or almost as much US Treasury securities as countries like China. And in fact, it's highly unlikely that Saudi Arabia isn't in the top 4 holders of US Treasury securities. And in addition to that, it's also important to note that while China's holdings of US Treasury securities are decreasing, the Treasury securities being held by Saudi Arabia are actually increasing on a pretty regular basis. And even if Saudi Arabia does start accepting other currencies, which they're open to for their oil, it is highly likely that they're going to continue to keep investing in US Treasury securities, primarily for the reason that owning those securities yields them a certain amount of global power. In fact, I would say that Saudi Arabia is probably one of the biggest global superpowers when it comes to the influence that they have over the US economy. And they've done it pretty much in secret. Now, this brings us to a conversation about the Petro Yuan or the Petro Yuan. Again, I'm horrible at pronouncing foreign currencies. Somebody will correct me in the comments. Totally, if I said it wrong, put it in the comments. But just because there's all these news articles about Saudi Arabia starting to accept foreign currencies doesn't mean that it's going to be a real thing, because the biggest importer of Saudi Arabia's oil is definitely China. But that doesn't mean that the trading takes place in the Chinese currency, primarily because the Chinese currency is one that is not widely traded worldwide, which means in order for Saudi Arabia to take that money in the Chinese currency, they would have only one place where they could possibly invest it. Now, is there a possibility that they might do that? Yes, but there's also the possibility that they may not want to do that given the fact that Chinese government has so much control over what actually happens with foreign investment within their country. Meaning that if Saudi Arabia put a whole bunch of money into the Chinese economy and the Chinese economy collapsed, well, there isn't really a market of other countries that would be able to come in and buy up some of the assets that Saudi Arabia owned. Or even worse, if the Chinese economy collapsed, it could mean that the Chinese government simply takes those assets and says, no, they're ours, and you no longer have an investment here. So the key point here is that unlike the US dollar, the renminbi, again, foreign currencies, is not freely convertible currency. Its exchange rate against other currencies, including the US dollar, continues to be managed by the Chinese central bank, which means that it is not a free and openly traded currency. And in addition to that, crude export proceeds in Chinese currency cannot be invested outside China as widely as US dollars. And they can only be invested inside China at the discretion of the Chinese government. So in other words, Saudi Arabia really can't pick and choose what they want to invest in. They can only invest in what they're told they can. And subsequently, the Chinese capital markets are still small, they're less liquid, and at significantly higher risk than what the US capital markets are. Now, all that being said, Saudi Arabia did just join the mBridge digital currency project, which is a project that is being led by China. And this is a project that is designed to make global currency exchanges significantly easier and subsequently global trade significantly easier. And while there's obvious benefits to this sort of a system, there's also some significant problems. Now, currently there's 135 countries and currency unions representing 98% of global GDP that are exploring central bank digital currencies. The US government, however, has created a law that prevents the Federal Reserve from participating in these types of currencies or from creating their own. So what you may see in the coming years is more commodity settlements happening in this new digital currency, but these digital currencies don't come without their problems. The first is that the mBridge transactions use a code that China's yuan is built on. That code is also available to the project's 26 other observing members that include the likes of, get this, the New York branch of the Federal Reserve, so in other words, the United States, the International Monetary Fund, and the European Central Bank. So while they can't create a digital currency of their own, they are involved in what is happening with the mBridge project. And the reason for this is fairly obvious. If there's a means of settlement for commodities that is easier to manage than changing currencies between one currency to the other, obviously that's a benefit for the entire world. But it doesn't mean that that digital currency won't be converted into US dollars as other countries continue to invest in the world's biggest economy. But even then, there has been limited uptake, especially in countries like Nigeria, that have already adopted it. And this is primarily due to both political and public feedback because of the obvious issue using Chinese software, which is the potential snooping that could go on as a result. And the primary criteria for a new reserve currency is that there will be trust in that currency. And already you can see that the trust in the mBridge project is already limited. So while there are things like the BRICS nations who are trying to find alternatives to US currency, and there's the mBridge project, which now has countries like China, Hong Kong, and Saudi Arabia on board, There's no clear winner when it comes to replacing the US dollar, and it's highly unlikely that there will be for a very long period of time. In fact, this has already been tried by the European Union when they created the euro in an attempt to make it the new world reserve currency. And obviously, we all know how that ended up when you had all of these countries trading in the same currency, but couldn't agree on what to do or how to operate the central bank. And these projects, like the M Project and the BRICS nations, are going to run into the exact same sort of issues. And until one of them figures out how you can have multiple countries working together to have a common currency that replaces the US dollar is going to remain the primary reserve currency for both the reason that it is the most traded currency already, it is the most freely available, and because investment in US dollars and the US economy is still the best investment that a country can make. So it's true, the stories about the demise of the US dollar and the petrodollar are widely misleading and very much based in the desire of those involved in the cryptocurrency industry to see the US dollar collapse in hopes that things like Bitcoin become the next big thing. And that's the real moral of the story here is follow the money, see where it goes. And if you follow the money and you find the news stories, ones like this that maybe the mainstream media isn't following, well, there's probably a good reason for that. And the reason for that is because these stories are designed to create fear and encourage people to invest in things like Bitcoin and other digital currencies and push more people towards those platforms. And I'm definitely not saying that Bitcoin is a bad thing. But what I am saying is that there are actors out there that will put out false information in hopes of encouraging more people to buy what they're selling. So ignore this whole petrodollar story. And by the way, if you are worried about the collapse of the US dollar and specifically what will happen to your debt if it collapses, make sure you check out this video right here.